Well, good afternoon then everyone, as we are at the end of another week of trading. We're at the end, we approach the end. We still have US session a little bit later on to have a look at once we get around to in about 15 minutes time. We will see what's happened over the course of this week so far. We started off on Monday. Started off this week, with pretty quiet economic calendar. Not too much really for us to go off in terms of high impact data. It's certainly out of the US as well, apart from that services PMI, which we'll get around to now in a minute. The bank holiday Labor Day in the US on Monday was a little bit of a shortened week then for the US. Monday, trade balance figures out of Germany didn't really mean too much to us. Doesn't shake markets up too much. We had a pretty quiet day on Monday. We then get into Tuesday, and the RBA decided to kick off the week with some heavy Australian dollar selling. Now that is a pause for the third straight month, and we had the Bank of Canada as well. I'll flick up the medium impact data release. I don't know why it's medium impact on this calendar, but it seems to always be with the Bank of Canada. But I'll cover the Bank of Canada in this statement as well. Basically, copy for each other. The RBA three meetings now holding firm on their interest rates, deciding not to hike interest rates any further, and it's just the same story across the two central banks. The fact that they note that inflation still remains elevated at a level that is too high than what they want. Further monetary policy tightening may be required if economic data warrants it. They're going to monitor the economic data going forward. If it's positive, they'll look at tightening further. If it's negative, well then they don't need to tighten anymore. So there's not much really else to come out of that. We've had some data releases out of Australia recently. Have been slightly negative. We saw GDP then the day after that has come out slightly above consensus, 0.4% growth or a quarter, 1.6% growth a year. Still slightly low, but central banks will target 2% growth per year. So in terms of that quarterly figure, it'll be slightly below what the central bank may hope for, but still 0.4% over a quarter isn't exactly the worst thing in the world. But the RBA seemingly done with their hiking cycle. As you can see, this big downside across here over the course of Tuesday night and into Monday night and into Tuesday morning. That big downside from Australia, followed by New Zealand as well, which was obviously a contributing factor for New Zealand as to why that sold off. But heavy selling in the Australian dollar, heavy selling in Chinese stock indexes again on that morning, which contributed to that as well. But mainly RBA seemingly done with their interest rate hiking cycle. That was really the movement on the Australian dollar really anyway over the course of the week. But aggressive downside in the Australian dollar. We had a bit of a pop higher yesterday on dollar CAD, or on Wednesday on dollar CAD, and a bit of a move back lower, but still that continues to grind higher. A bit of strong employment data out of Canada just recently over the last hour, but we'll cover that in a minute when we get around to it. But Australia and Canada, the two respective central banks, monitoring incoming economic data in order to make future decisions on monetary policy. But in my opinion, both are seemingly done with their hiking cycle for the moment. On to Wednesday, we saw the services PMIs out of the US, which beat consensus quite drastically. We saw some pretty broad-based stock index weakness off the back of that. You can see these kind of downside candles on Wednesday on the S&P. You can see these down candles on the Dow Jones. Same thing over here with the Nasdaq, and the same thing over here with the Russell. So aggressive downside off the back of that across the major US indices. They have paused slightly and have chopped sideways since then, but the US dollar as well has also kind of been a little bit choppy to end the week, which we'll get back to the US dollar in a bit more detail in a moment. And also yields popped higher off the back of that and kind of retraced their moves, which is reason for choppiness across markets. But services PMI sparked a bit of stock weakness, bit of US dollar strength in the aftermath from that, and that is another strong US data point pointing towards resilience in the US economy. Trade balance figures from Australia and China. A bit negative for Australia, a bit negative for China. Imports and exports both down in the respective nations. So again, not a positive for global growth, but certainly those Chinese balance of trade balance figures, should I say, they are not being negative, not positive at all for the Chinese economy, as it is both imports and exports decreasing. This IVPMI showing the business conditions likely to remain okay in Canada going forward. Actual 53.5, so a solid beat in consensus of 49.2. Remember, with the PMIs 50%, or say 50%, the 50 number, anything above that considered expansionary, anything below that considered contractionary. So the fact you got 53.5, pretty solid number in the Ivy PMI. Come around to today, the unemployment rate ticking down in Canada, I'd say ticking down, but down on consensus in line with previous. So 5.5%, missing consensus slightly. Obviously, a missing consensus is positive as it is the unemployment rate coming down. So a couple of strong data points over the course of yesterday and today from Canada, which has sparked a bit of upside in the Canadian dollar, which is obviously a bit of downside in dollar CAD, which is maybe something to know going forward. But you have to imagine they still are done with the hiking cycle, but strong economic data points, somewhat increases the likelihood of an interest rate hike to come in the future, but chances of that are still relatively slim for now. But what has gone on across markets? US dollar not just is looking as if it was pretty guaranteed to notch its 8th consecutive weekly gain, which is the most amount of consecutive weekly gains since 2014. So the dollar continues its move higher, continues its trend higher, and as long as the dollar trends higher, you have to keep buying it. You cannot sell into it. When you'll get little pullbacks and stuff every now and again, but not exactly the most profitable trading strategy. So US dollar strength across the board, equities down across the board, downside in equities, wherever you look, whatever country. You can see the S&P, the Dow Jones, the Nasdaq, the Russell, the DAX, the Euro stocks, the FTSE, all down. Concerns for global growth, concerns for interest rates being higher for longer, potentially concerns of a recession globally at some point next year. So markets continue to be put under pressure. Bond yields are a contributing factor to that as US yields continue higher pretty aggressively over the course of this week. We have had a bit of a pullback over the last kind of 24 hours, which has provided some respite, but there's really not a lot we can do about, not a lot markets really want to do off the back of that. Yields are still high, yields are elevated, they are likely to remain elevated for longer than markets had first anticipated. That continues to play a part in markets. Or the longer or the more yields continue to remain elevated or even push higher, the more negative that is going to be for stock indexes and positive for the US dollar. Oil, other thing to note on oil, Russia and Saudi Arabia extend production cuts through to year end, so that decreases supply of oil through to year end. You had the big spike initially off the back of it, has just chopped sideways off the back of that, or since that, should I say. The last time they did chop sideways for a little bit and then got going again. I don't think there's going to be too many market participants that really want to buy oil at these highs. People will want to buy a dip, so any dips into next week on the price of oil, we will be looking to pick up to take back to the top side. Even though demand will remain weak, Chinese economy struggling, the more weak data points we get in, less demand there will be for oil, or the opinion of there will be less demand for oil. But Russia and Saudi Arabia cutting production to oil, as long as there's nothing done to counteract that, you'd have to imagine you continue to buy dips on oil. That's pretty much where we are at for the week. Last thing of the week is obviously Saturday at 2:30 a.m. So tonight markets will be closed. We got Chinese inflation, disinflation in China last week. People will be hoping for the disinflation to be spilling over into the rest of the world. Has not happened just yet. Consensus 0.2, so we're expecting inflation to pick back up again in China, but previous 0.3% or minus 0.3%. If that can come in line with consent or below consensus and back to negative, I'm not sure how markets really take that, to be honest with you. It's probably negative for the Chinese yuan, which is at its lowest point since 2007. Negative gives you a fresh reason to buy dollar yuan. How other markets across the world take that, I'm not so sure. I mean, the consumer, people will want disinflation in order to actually get prices down. Prices, I spoke about a lot of times on these videos, prices are not actually coming down, it's just the rate of inflation is slowing. That is a big difference between prices coming down and prices going up a little bit slower. So prices going up but still a little bit slower at the moment. Disinflation is really what's needed to get prices under control for people. Well, I don't think central banks and government will care too much about that. They just want inflation back to 2%, which the majority of people that don't understand financial markets will not understand. How markets then react to that? Disinflation in China. I mean, it's positive in terms of interest rates not rising, but it's also negative in terms of signs for future growth globally. So how markets react to that? Not really too sure, to be perfectly honest with you. Sometimes you're best to just admit you don't really know. But anyways, that is it from me then, folks. I'm going to wrap it up there. Have a good weekend. I think it's the last weekend of sun we will get in London. 22 degrees and a bit of sun tomorrow, I believe. So enjoy yourself. It'll be a long, cold winter. So get out and about, recharge the batteries, and we'll be back next week for another week of trading. Thank you.